Welcome to today's market report. European stock markets are set to open higher on Friday, buoyed by the US Fed's new monetary policy framework, which will likely see interest rates in the world's dominant economy remaining low for longer. DAX traded 0.5% higher, FTSE rose 0.4%, CAC climbed 0.3%. Under the new approach, the Fed will seek to achieve inflation averaging 2% over time, offsetting below -2% periods with higher inflation for some time, and to ensure employment doesn't fall short of its maximum level. Their new language gives them the flexibility to let the economy run a little hotter before contemplating raising interest rates, and gives the green light to more modest yield curve, steepening the dollar weakness, according to the AIG. The need for an accommodative policy was illustrated by Thursday's weekly claims data, which showed some 27 million Americans are still receiving some kind of government and unemployment assistance. Turning back to Europe, the German GfK Consumer Climate Index disappointed, with the September figure dropping to -1.8% from -0.2% in August, a development that parallels the revival of the coronavirus in a country that had handled the first wave better than most. In corporate news, Norwegian Air Shuttle is likely to be in focus on Friday after it warned that there is a significant doubt over its ability to continue as an ongoing concern if it cannot meet its financial obligations next year. Sanofi said on Friday that it intends to start a tender offer for the acquisition of US-based biopharmaceutical company Principia Biopharma. Oil prices were largely unchanged on Friday, with Hurricane Laura blowing through Louisiana and Texas, the heart of US oil industry, without causing major damage to refineries. Crude future traded flat at $43.05 a barrel. Brent rose 0.1% to $45.65 a barrel. Gold futures rose 0.9% to $1,949.50 per ounce. On the FX front, GBP USD refreshes the intraday high to 132.42, up 0.29%, while heading into the London opening today. The cable, unlike most majors, refreshed the yearly high on Thursday before declining to 131.61, which snapped the two-day winning streak. The broad US dollar rally after comments from Fed Chair dragged the quote downward the previous day, while the greenback's latest declines favored the pair both ahead of BOE Governor Andrew Bailey's speech. While flashing the third positive day in pile 4 days, the GBP USD prices also pay a little heed to the Brexit woes signalled by the Times. The news said Downing Street has been warned that Boris Johnson has less than 2 weeks to save post-Brexit trade and security talks. According to the senior EU sources, it's worth mentioning that the final scheduled round of post-Brexit trade negotiations between the EU and the UK have already failed out. Diplomats are likely to meet next week. Further to the note is Germany's removal of Brexit talks as the agenda from next week's key talks among the EU ambassadors. Euro-dollar sticks to the consolidated range between 117.40 to 119.30, according to the UOB Group. Analysts expect euro to grind higher towards 118.65 yesterday, but were of the view of 118.95 is unlikely to come into the picture. Euro popped to a high of 119, dropped to 117.61 before snapping back up to end the day a little changed at 118.21. The rapid but short-lived swings have resulted in a mixed outlook. Number of confirmed coronavirus cases rose to 239,000, with a total of 9,288 deaths. In Germany, the total active cases across the country rise to around 17,020, the highest since 10th of May. The dollar weakened in early European trade on Thursday, and today the dollar index was down 0.4% at 92.653. This is today's market news. Thanks for listening. We'll see you next time.